Hello, wonderful traders. Welcome back. Please take some time to read the disclaimer and you can pause the video if you want to. Unit 3, Part C. In this unit, I will not be going too deep, but I will give you some concepts that of course you can make researches on, and you can look for these kind of things as I will explain for you in the market. In the following slide, and then you can look for them in the market. Okay, but if you would like to learn more than I am explaining here, you are allowed and actually invited to join our mentorship program, which offers mentorship. It offers, we give you trading ideas. You join our group and then we give you trading ideas. We have different mentors in Onyx that uses different kind of methodologies to trade. Some are using these concepts that you are learning, and some are using other concepts on the previous lessons. And there are just so many of us and we are helping each other. So if you join our group, you will be a part of something big, because I'm not the only one here. I'm just being a representative. I am actually the course educator at Onyx, and we are a collective of individuals helping one another, just like your organs in your body. Okay, so in this part C, which is the last part that I'm providing for you guys here, we will be talking about smart money trading key concepts. Okay, what is it that we call smart money? Smart money, we can refer to them as the big institutions that have the big money. Yeah, they are the ones who are moving the market. Have you ever heard of people called market makers? Well, I just gave you a clue there. Go and make a research. Remember, I may be teaching you, but I'm not here to spoon feed you, right? And I know you appreciate that, because it leaves room for your improvement. So here we are going to be talking about points of interest, and then we'll be talking about what we call an inducement. It's also referred to as deception, lure, or trap. Liquidity, which is also referred to as a stop hand or a fake out zone. Types of liquidity. But there are those that I'm not going to be going deep to explain, but I'm just giving you guys a clue that you can make a research on. And if you'd like to really learn more, because there's actually still more information that you can learn when it comes to smart money concept, supply and demand, in order for you to use them to trade effectively, join our mentorship program and grow with us. This is something that we are going to be looking at, and we are not going to go any further from here. Okay, so let us check. What is POI? POI is the zone at which we expect to take entries if our strategy gives out a trading signal or setup. It can be any kind: base candle, which is order block. It can be an FTR, it can be an FTB zone, So suppose the market was rising, forms a high, a low, a higher low, and then forms a higher high here, and then it drops. As the market drops, it comes to this point, gives you a change of character, and you and I know just after the change of character, we are gonna go into this previous structure here to search and check if there was any identifiable order block. In this case, it can be the last bullish candle, or maybe a bullish candle will be somewhere here as a bearish FTR. Okay, and then the market dropped. Now, when the market comes back here from this point, the first low here, and it goes up, normally, even if the market will, even if the market can turn from here and go down, normally the market will go and form what we call a lower low, just to come back up here again and begin to do what we call deception. An inducement is a deception point where they give you, or the market has created what is seen as an order block, but it is a weak order block that is inducing you to take sell entries there and put your stop losses above. These dollar signs here represents your money, your stop losses. People, what will they do? They will see this order block, the last bullish candle that is there, and begin to sell massively, telling themselves that, you know what, I'm the best trader and I'm killing this. Guess what? The market goes back up to wipe their stop losses, because remember, a lot of people are greedy, and sometimes it's not really because of greed. You find that maybe you are targeting a low point here, maybe you are targeting the previous demand, and the market doesn't go to that point, it goes up. So up here where your stop losses are sitting, that's what we call a liquidity pool. Okay, so a liquidity pool is a place where people's stop losses are sitting. It's a place where many other pending orders are sitting. So they will be hoping or looking to trigger those entry points or those sell stops, sell limits or sell stop losses, and then they create something. As they break this inducement zone here, people will begin to think that, oh, the market now is starting to create a higher highs and higher lows, which means that as it was creating that, it means that the market has more power to go to the upside. And then just after this break of this zone, people will start beginning to look for buy entries there, and then they buy, and then as they buy, where will they put their stop losses? Beneath the low point. And then now the market makers who have trapped these sellers here, taking out their stop losses, begins to drop at that supply point, which is our point of interest. So you and I, understanding this concept, will know what we should expect. Okay, so like I said, guys, I'm not gonna be diving deep. I want you to go and make your research, and for any more information, please join our mentorship program and grow with us. Okay, so as the market reached our point of interest here, which was the order block, which was our supply zone, you and I know that we can go to smaller time frames and look for the same thing happening here. Okay, so in a smaller time frame, again, you may find a change of character. Just after a change of character, you identify an order block, and then you will see an inducement there. Don't be deceived. They are luring you into taking a trade there so that they can capitalize out of taking your stop losses, So be careful of such things. This zone here is a fake breakout to the upside, because just after breaking up to the upside, the market comes back down and break to the downside, and then what it happens? It drops. Okay, so as you can see, the market went to our point of interest, came back down to form a sell side change of character, a bearish change of character, then went back up, and we hope that there was an order block there. And then as soon as you find an order block, it can be an FTR, an FTB zone, a base candle, or maybe a certain consolidation zone. And then as the market reached there, it begins to drop. You can sell there, and then you can target your previous demand. And like I said, you can flip this upside down. So please do that and begin to work. Thank you very much, guys, for being with us throughout this course. More videos will be provided in our mentorship program. May God bless you, and may you receive the wisdom to continue learning without giving up. And remember, we are here for you. Do not hesitate to become a part of a big group, because as Onyx, we have many other mentors and co-workers who can help you and help you become, the best trader that you desire to become. Thank you very much, guys.